I'm so overjoyed to be sharing with you guys and gals tonight. You know, I want to thank you for your time. One of the things that's so important is that we have to have our financial literacy, our financial education and planning spot on and tight. Why is that, guys? Because today, in today's world, a lot of people may lack the understanding of money and finance. I want you guys to think, when you were at the dinner table, did your mom or your dad or your adopted dad, adopted mom, vice versa, ever have the conversation around financial literacy? Or, for example, did we talk about basketball, the TV? Did we talk about the, different movies and things like that? Not that that's bad. Not that that's bad or anything. Okay, I see the book. Okay, let me just try to fix that. What about now? Is it still kind of blurry, or can you see it? Some of it might be zoomed in, some of it might be zoomed out, depending on if you're on a computer or a phone. I'm going to put it back a little bit to 100%. Let me know if that's better.
The book is still looking blurry.
It's still looking blurry, the book. Okay. All right, hold on. Let me go to share. Let me try this. All right, what about now?
Still blurry.
Still blurry? All right, let me try something. Let me do a backup. Let me see. What about now?
Still blurry.
Still blurry.
I don't think it's any of that, though, what you're doing, because everything is blurry on your screen. At the top where it says tools and everything, all of that's blurry. But it looked like it's getting better, though. It do look like it's getting better.
Okay, let me know.
Yeah, that's good.
That's good. It's blurry. It's fixed. It's back to normal. Is it clear? Let me know.
It's legible. It's legible.
It's legible. Okay. Okay. All right. Let me try this new share thing one more time, and let's see if that works or not.
Okay. Yeah.
That better?
Yeah, that's better.
Yes, better.
Okay. Awesome. All right. I had to make a technical adjustment. So, all right. Anyway, thank you for letting me know that. I definitely want you guys to see this information clearly and everything like that. So, estate planning is very important in today's world. I want to share with you a quick story. For those of you who know the organization, Each One Teach One in Harlem, my dad and my godfather and that foundation was also part of that. They were also part of the Rucker organization as a whole, and they also help with the motto Each One Teach One organization. One thing that's so important about that is that my dad believed in financial literacy and financial intelligence among people, and especially among our people. So before he passed away, he said, Raymond, make sure you keep teaching this to us, because nobody is teaching us this information as a whole and as a community. My father paid his way through college through basketball, and I'm helping other people pay their way through college or business through financial education. Now, one thing that's so important, I'm not sure if you guys are aware, but in the chat box, by a show of yes, by a show of no, we all experienced somebody who passed away, right? I would agree, whether it be a mom, whether it be a dad, or anything like that. And let me ask you a question: when they were on that path to, let's just call it the other life, and I don't know if they had cancer or if they had an illness, but when you saw that doctor's bill, was that doctor's bill or that home care bill anywhere from like $10,000 to $300,000 when it came in the mailbox? I'm not sure, or the hospital bill, whatever the case may be, for like a crazy illness, but you weren't expecting the bill to be like that, and you had to maybe claim bankruptcy, or you heard of other people potentially claiming bankruptcy or something like that. Well, I want to share with you guys, my dad used to work for the government, and he had crazy benefits where they paid for a lot of stuff, and he also had private plans in place. But what if the people out there today don't have those government benefits? What are we doing to protect ourselves? Because when that bill came into our home, guys, it was $300,000. Black square is covering part of the book. Okay, what about now? Okay. It was $300,000 for that process. And we literally didn't pay anything. It was all paid for. This is the kind of stuff I want our people to be able to say when crazy stuff happens in life. And he did that with proper estate planning for myself and my mom and the people who were close to him. Because I'm wondering where all these people coming into the house and how are we paying for it? A lot of people, God forbid, passed away from COVID. Some people in my family passed away from COVID. But did we have our proper stuff in place? And it begins with estate planning. And it says, few people think about estate planning. If people don't do much in terms of saving, investments, insurance, estate planning will not be on a priority list. A lot of people may think that estate planning is only for the rich and famous, but I'm here to tell you guys it's not. If you have a bank account, if you have debt, a car, a house, an apartment, you have an estate plan because that has to be passed to somebody in the future. I want you guys to imagine that you worked hard all your life. And I mean, when I mean work hard, I mean business ownership, a job, whatever the case, raising kids. You worked hard all your life. But then when that day came, due to lack of preparation, the government took half of all your money and your assets. I know nobody would like that after all work. But it happens every day, not just to our people, but people in general. So how do we protect our assets so it's less likely to get taken away? To keep it simple for now, of course, I'm going more detail of this at another time, like a part 2. You need to have a will and a trust in place. Now, the question may be, which one is more secure? A will, a trust, which has more defense? Well, to keep it simple, I'll just tell you the answer for now, for collapse timeframes. The one that protects you the most, like you're blocking and boxing, is a trust. The reason why a trust is because a trust is protected. If it goes through probate or somebody tries to sue you, the trust shields that. We can think of a will like the will has good intentions because that will be done, but somebody could challenge that. It can go through probate. So if you have baby mama, daddy mama, suit, whatever, it can be challenged. But a trust, you can't challenge it. So we help specialize in protection with a trust depending on your personal situation, whether for your business or your family, to help legally hide your money and store it so it cannot be touched. And that is so, so, so important. Okay, now I'm going to jump to another thing that's so important. So if you have a notebook, write down will and trust and get back to Raymond G to learn about that. So this book here. So for everybody on this session tonight, you guys are also going to get this book as a complimentary for being on tonight to review it for yourself. And Brother Yomi, I'm going to email Brother Yomi the book. And one thing we're going to do is do like an email list so I can send you guys updates. But for you guys for taking your time out, you're also going to get a complimentary book that you can also read for yourself to go over the topics that I am talking about tonight as a gift to you guys. Now, this is a table of contents of every single thing. And one thing that's so important that we know is that we don't know much. We don't teach it in school, and we do a lot of things that we may not know about. But there's one thing that's so, so key, guys. There was nobody more interested in your financial future than you are. Not the government, not the employer, not the job. So we have to do things as individuals and also as a unit in order to empower ourselves. And we teach that within our workshops. So one thing that's so important over here, guys, it talks about different platforms. Self-security, personal savings. There's 38 million Americans living from paycheck to paycheck. About 59% are in debt. Now, I want to first say congratulations to you guys who may have a pension. If you're a teacher, firefighter, policeman, you may have a pension. But the thing is, though, for older millennials and younger millennials and some Generation Xers, you may not have a pension because there's three-legged stool here. There's Social Security, personal savings, and company pensions. So the thing is, if you don't have a pension, how do you create your own pension to have guaranteed income and tax-free income in the future? So I help specialize in creating for business owners and families to create your very own private pension in the future. And we also show you how to do that on a one-to-one basis as a whole as well. Now, I'm going to go to page 6. Now, I need you guys to take these notes right here in relation to page 6, because this starts everything as soon as you're literally born, but you may not realize it, guys. You have to build a financial foundation, just like building bricks or building a house, or for the decorative people out there, building a cake. You start with the foundation of the cake, then you go to the next one, then the next one. So what does that mean in terms of us? What it means in terms of us, guys, is that we have to have protection first. And when I mean protection, just like a shield, it means the proper insurance. Now, some people like that word. Some people hate that word. But I tell you one thing, the wealthy love that word because they use insurance while they're alive, not while they pass away. And a lot of people have been spooked or demystified for thinking it's bad when it's the most generating wealth vehicles of all time, because they have been doing this for over 100 years. And we have been tricked into thinking only doing investments. But I want to ask you guys a question. If your investments go down, do you make money or lose money? If you have credit cards, do you get more into debt? If you don't have an emergency fund, what do you raid first? We educate and let people know if you have your foundation, the protection of the right insurance, you do not have to raid credit cards or emergency fund or your investment, because your protection, like a shield, will take care of the stuff that comes up in life. And that is so important to understand. This says, guys, as a priority, you should consider protection first. Why? If you try to save a few $100s a month, but you have no insurance, when you get sick, disabled, or pass away, your savings will not last very long. And just like if you had an emergency, how many people out there maybe got into a car accident and it wasn't their fault? When I got into a car accident, my deductible was like $1,000. I pulled money out from this vehicle that was growing interest over time, so I'd have to go in my emergency fund to pay that large deductible, right? I know any of us got into a car accident more or less in our lifetime, and those are not fun, right? So this is the most important thing right here, guys, and I'll review this again on another class. Financial foundation, investment, emergency fund, debt management, and protection. If you want, you can take a snapshot of that, and I'm going to go into the detail of why this is so important. In relation to this, where do wealthy people, for example, keep their money in relation to this financial foundation? Now, I want you to know the concept of 4 boxes: growth or safety. Which would you rather have, or would you rather have both? You can write in the chat which one you like to have. You want a lot of growth on your money? You want safety on your money where you don't lose it? Do you want a combination of both? There's many different avenues. What the wealthy have come to figure out is how to get growth, safety, tax advantages, and also protection on their money without losing any money. That's the key thing. How do you legally not lose any money? And that's what's very key that they've been doing for over centuries. But then they tell everybody else, the 401k, the stock market, real estate. Not saying that those are bad things. Those are all good things. But you have to have your foundation where you don't lose money, right? So tax advantages is so important. So what does that even mean, tax advantages? Does that mean, I don't pay taxes? Does that mean I pay minimum taxes that are allowed by law? Does that mean I pay the most taxes because on my W-2 form, I had the government take out everything, but I claim my mortgage deduction as a tax benefit? That means a lot of things to different people, and a lot of people have different mindsets on how that work. So page 78, this rule is one of the most important rules to understand without any crazy technicalities. This is called the Formula 10-20 rule. It means that you need 10 to 20 times your income to protect your family and to retire. So let me ask you a question out there. If you guys are making anywhere from $40,000 to $100,000, I want you to, on paper or in your head, multiply it by 10. That number means how much insurance you need to protect yourself so your family has supplemental income in the future so they don't have to worry about anything. Okay? Now, what does the 20 part mean? The 20 part means this, guys, as a rule of thumb. You need 20 times your income to retire. Now, a lot of you may be thinking 20 times my income, 40 times 20, 100,000 times 20. Whoa, I may not have that now. If you do, congratulations. But here's the little catch, guys. Here's the catch. It doesn't mean you need 1.1 million, as it's saying right here. What it means is if you guys stopped working right now, do you have a vehicle that is producing for you $50,000 per year, $100,000 per year in general if you stop working today? If the answer is no, or is a question mark about that, we educate people over time with consistency how to generate that $50,000 or $100,000 per year if you stop working today, and what vehicles you need, what system you need in order to help get you close to there, depending on your age, depending on your assets, and different things like that. So, real simple formula again, repeat real quick. 10 times your income needs, how much income you need in case you pass away, that goes to your family. The 20 part is, if you stop working, can you continue your income? And a lot of people tell me no, only a little bit tell me yes. So we're going to show you different ways to do that for the time we have. And again, we can definitely do a part 2. Now, I'm going to skip over one section for the sake of time. I'll probably do that section in part 2, but I'm going to go to page 17, and you can write this down, guys. On page 17, this is showing, I hope you guys can see it clearly. If you can't, please let me know. This is showing different categories where people put their money in general. So we have a tax now account, guys, a tax later, and a tax advantage account. In the tax now account, we have our checking, savings, CDs, stock market, stuff like that. In our tax later side, we have our 401ks, which we heard at a 9 to 5. We have a 403b. All this is telling me, and other financial educators who know what they're doing, is telling me where you work. If you have a 401k, you may work for a Fortune 500 company. If you have a 403b, you may work for the government or some type of school system or hospital, but it basically does the same thing. There's a bunch of mutual funds, a bunch of stocks that go up when the market is good and down when the market is bad. Here's a question, guys. In 2008 and COVID, if you had to retire tomorrow, can you retire tomorrow when the market dropped like the waterfall? Everybody knows that answer is maybe no, unless you move your money out of a 401k or 403b and put some of your money in places where you don't lose money at all. And that's what we also show people how to do. The next thing is, say, for example, you retired in the 90s, like 1990s, and you can throw a dart at the stock market like this, and you made money. Today, that's really maybe challenging to do, maybe. But what we educate people about is that when you retire with a 401k or 403b, and let's say it's anywhere from $60,000 to $100,000, we teach and educate you on how to transfer it to vehicles where you don't lose money anymore. And then you have a consistent growth over time, and you can generate guaranteed income along with the other assets that you have. So when you retire, guys, whether it's 59.5 or 69.5, the goal for your 401k or 403b is to put in a vehicle that's safe, that's going to grow consistently. And how do we do that, guys? It's called this, a private pension that we talked about with the four-legged stool. We move over a 401k to a private pension, AKA an annuity, where you have consistent growth over time in certain ones where you don't lose money. So take a note of that, guys. That's one way to not lose your money, is to put it in a safe annuity, and we show you how to do that. Not the ones that go crazy annuities. There's a safe one out there. And I can share on part 2 later or another time how that safe one actually works where you don't lose money, okay? So 401k into a private pension, AKA a fixed index annuity. So now let's say, for example, guys, you have extra money, whether extra $10,000 a year, an extra $4,000 a year. I want you guys to think about what are some tax advantage or tax-free income vehicles where different funds could go. We've heard of, for example, a Roth IRA, perhaps. We heard of a 529 plan, perhaps. But in a Roth IRA, guys, you can only put in about $5,500 a year. Now, if you're making $200,000 or $150,000 a year, and you also have a business, you are technically priced out of that category for a Roth IRA, and you cannot use that Roth IRA. A lot of people may say, okay, let me put money in a 529 college plan for my son or daughter. But did you guys know in general that if you apply for college and you have the majority of your money in a 529 for your son or daughter, and say they don't go to college, all that money is taxable. They have to go to college no matter what. And the other caveat is, guys, is that the college and the FAFSA, when you apply, could see how much money is in there. Now, if I'm a college, say Yale, I went to Virginia State University, by the way, Trojans, and I was in a band and all that stuff. Band was fun, little side note. But you went to college, guys, and you had a lot of your money in the 529. I'm a college, I see that. The question is, am I going to give you a lot of money to come to my school? Or am I going to see the 529 at 100,000 and be like, they can pay for it? Which one do you think I'm gonna look at? Some of you may say, by show of hands, do you think I'm going to give you more money? By show of hands, you think I might give you less money? Or by show of yes, no, or up and down, whichever the case. So that's less money. Okay, brother Yomi says less money. What do other people think? More money, less money? So the question becomes, guys, where can you legally put your money where you do not have to report it to the college or FAFSA? Now, believe it or not, depending on the education, your life experience, and all this stuff, one vehicle is life insurance, believe it or not. Now, a lot of people heard different definitions of that word. Some people heard term insurance. Some people heard whole life. Some people heard final expense. Some people heard whatever things. But guys, I'm sharing with you today, and I'll do a part 2, that the wealthy people who mean well put their money in a particular type of life insurance where you don't have to pay taxes in the future, because you already pay taxes when you were working or your business. If you get sued, they can't touch it. I call it the O.J. Simpson effect. When you have a business and people want to get at your money, they can't touch it. If you have baby mama or daddy mama drama, they can't touch it either. It doesn't discriminate on race or sex. If you want to put a business trust together to pass down your wealth so you don't get taxed, you can do that too. So what am I talking about? What does that mean, guys? A lot of people out there sell or market what's called death insurance, whereby when you die, you pass away, your family gets money. And I'm using that word on purpose to be transparent, not to hide anything. What I educate about and the team that I work with, we help people put the word life, the word in life insurance, to use the money when you're alive today to do what my father did for myself and my mom, whereby you use the money while you're alive and get it tax-free in the future. Because the word life in life insurance is what is truly meant to be, and not death insurance. And there's a real key mindset, perception, thinking that has to shift with people in general to get that concept, because that's how they tricked us to not really do it throughout the years, because they gave us the other stuff. They gave us and if you like these restaurants, please don't take me wrong, guys, but they gave us the McDonald's, the Wendy's insurance, while the other people been having the Starbucks, the Chef Boyardee, the natural syrup of insurance and stuff like that, right? Where you put in all these natural ingredients in you and you're living strong. While if you do the McDonald's or the Burger King, you may be getting weak. Now, I'm not going to front. I sometimes do that at McDonald's too, but I also do my smoothies, okay? I do my smoothies as well. All right, so don't get on me for like McDonald's. I'm just giving an example, all right? So throw a little joke in there. But at the same time, guys, what we have to understand is how do we use the life insurance like the rich do? And that's what I'm going to show you for the short time we have, I'm going to show you a couple of real life examples of that, okay? That sounds fair enough? So now I'm going to jump to page 46, and I'm going to show you a real life example too, all right? Now, this is something that my dad did, and let me actually jump to that now. I hope you guys can see this. I'm going to skip to the part that I was talking about. I'm going to show this other stuff a little bit later. I'm going to skip to the part where it's amazing. So I want you to understand, guys, I'm going to zoom in. I know some of you guys maybe can't see it if you're on a phone or the laptop. Let me try to zoom in for you guys. I hope it's not too far zoomed in. Let me scroll down a little bit. Now, we work with many different companies in general that you're going to see later, over 60 different plus companies. And each of them have their benefits. Can't go over all of them. Now, I want you to look at this number here, and I want you to look at this terminology here. I'm going to zoom in even more to try so you guys can see this. This says $823.73, okay? This family had a major life catastrophe, the individual. And the individual was still living. The names are blacked out for privacy reasons. But the company bequested to this individual $200,000 while they were alive. $200,000 went into their bank account while they were alive with this type of strategic life insurance. That is powerful. I want you guys to ask the question, when something happened to a family member and they had quote unquote insurance, were they bequested living benefits to use the face amount while they were alive, to fund a medical procedure, to fund college? This is very key. Write down critical illness benefit, $269,000. Now, why is that important, guys? This is something called a living benefit. And this is known as an accelerated death benefit. And it's a feature where the insurance company pays or advances a portion of the policy's death benefit to the insurer to pay for care or treatment. So guys, when my dad was sick, he couldn't walk, he couldn't bathe himself. I was going through a lot of emotional stuff. He had something like this in place where we didn't pay for a dime for nurses to come in. The money was bequested. How many of you out there know somebody who's been in a crazy situation like that? And they're going to GoFundMe, they're going to the church, they're going to the friends to get money to pay for things. But if people were aware of this type of benefits and using it while you're alive, you would not have to go to GoFundMe. You would not have to go to like the other houses to collect money. And this is so key. The reason why I'm paying attention to it is because this right here, if you get this, you help change your mindset and you will change your generation. But now let's say, for example, guys, that this person got better, right? Got better and didn't pass away. All this money in here, you do not have to give back to the company. It is yours. And we show you how to set something up like this, which will probably be for a second session to show you how to do that, or a one-on-one. So key things, since I can't hear your reaction, but a key thing, right? Wow, my rich patients have this. Thank you, Trevor, for sharing. Thank you, Latonica, for sharing. Okay, less money, Yomi. Thank you. Yes, you said rich patients have this. Now the crazy thing is, Trevor and Latonica and Yomi, you don't have to be rich to have this. Because my friend who's in his 30s, you know, he saw his brother get shot in Patterson. He had no protection. That funeral was like 30,000 G's, right? So my boy called me and said, yo, Ray, I need that thing you're talking about with those living benefits and that protection and tax-free income. So right now, my boy qualified for $500,000 of protection. But guess what? In the future, when he gets older, if he has a long-term care thing, a critical illness, a terminal illness, like Trevor's saying, he's in his 30s now. When he gets older and say, God forbid, something crazy happens to him where he needs stuff like this, he will be set. He will be set. Why will he be set to have these protections? Is because he started early when he's healthy. You do have to qualify for stuff like this. They don't just give it to you. That's how Trevor said, my rich patients have this. They probably got it when they were mad young, when they qualified. Now they don't got to worry about a thing. Imagine if I'm just going to be real. Imagine if all the Black people had this. Do you think we'll be going to the poorhouse? Do you think we'll be going to the different GoFundMe centers? No, we won't. We won't be doing that because we'll be self-funding our care instead of asking for it from the government. That is so key right here, guys, that I really want you to understand this part here, okay? Now, the next thing that's so key besides this right here is how else we can use it for living benefits, okay? Now, I'm going to go down. It says tax advantages of life insurance, guys. Now, I'm not going to focus on the first one. This is the one we all hear about. I'm going to focus on the one where you can get tax advantage / tax-free income with a exclamation point. Now, this says tax deferred earnings, guys. You do not pay any taxes on the gains in this type of strategy. Okay, you don't pay no taxes. You may be asking how you not pay taxes, Raymond G. You don't pay taxes because when you're working a job or a business, you already paid taxes from your job income that came out. So any money you put into this strategy is after tax income, okay? And you put that after tax income in this type of strategy and policy in order to produce the benefits for you, all right? You also get tax-free withdrawals. What does that mean, guys? When your savings is built up sufficient, because this is not a get quick thing. No, it takes a minute. But when you extra fund it, when you overfund it correctly, and the person knows what they're doing when they design this, and that's key. How do you design it correctly for your personal or business situation? And when the cash savings grows, it can be taken out tax-free, okay? Now, here's the other benefit. You can also take out tax-free loans, for example. Now, loans are not taxed in America. And this is why you design it properly so you don't got to pay that loan back if you don't even want to. And then when the interest builds up over time, you're getting credited money by mirroring or copying the stock market. So say your loan is 1% and your stock market return is 6%, it's covering that interest from the loan. This right here, the foundation, is one thing the wealthy are doing. And we as middle income or high middle income or low income, whatever you want to call it, we can set up a plan strategy for you to take advantage so you and your family could be secure in the future, okay? So that's important. Now, how does this work? I'm going to show you 2 or 3 examples of this working. I don't know if I'll have time to show you the community stuff that we do. Depending on the time, I can always show you that later. This says the importance of tax advantages. The tax advantages of insurance are only good if you have significant gains of money in the policy. Now, I'm not going to get too deep with this. This is before another class when I break down all the different types. But if you have term insurance, guys, all these tax-free loans, tax-free withdrawals and tax-deferred earnings are of no use because term has no cash. And if you do have a permanent one and you don't put a lot of money into it, it makes little difference. Now, here's the thing. I sat down with many people when it comes to evaluating their insurances, evaluating their investments, evaluating their wills. And I've seen a lot of people not have the optimal upgrades because at the time of when you learn something, whether it's whole life, term, final expense, you make the best decision with what you know at that point. My goal is to help upgrade you guys' decisions in the future so you have a total holistic perspective in order to generate more tax-free income so you're not suffering in the future. That's one of my goals, okay? It says in reality, many people don't understand the advantages of the right insurance. And in the past, traditional policies had very low rates of interest and didn't have a lot of high cash value. Now, here's the key, guys. With all the money that the government has paid out to businesses and people and the $600 unemployment and the payment protection, all this stuff, do you think taxes are going to go up higher or are they going to be lower? By show of typing or hands, you know, put it in the chat box what you think as I continue. But in general, guys, what if it's higher? And say you make $400,000 a year. My friend just called me. He works in a hospital. He said, Raymond, do you know where I can put money, or my director's money who makes a big whop of money? Where can she put it to lower her taxes? I'm like, you got to put it in what you have, my dude. The right insurance to pay tax, to have lower tax bracket later. Because this doesn't get taxed, okay? Just want to emphasize that. Here's the other thing that's key, guys. Page 47 to 48. I know we have some business owners on the line here. That's going to be for another subject. There's business owner strategies, but I will touch on that another time for respectful of time. And I'm also going to slowly wrap up soon, but I want to show you some real life examples of what people are doing from the people who are, shoot. That's all I got to say with that one. Let me try to zoom out real quick, and I'm going to show you exactly what I'm talking about. And please, and if you have a cup of coffee, if you have water, if you have a drink, please do not spill it when I show this. If you have popcorn, put the butter down, please. Why is my computer want to act funny? Okay, now I want to show you this, guys. And it's very, very key. This is an example of what everybody could use. Now, when you see this number, do not be alarmed or scared, okay? It's showing the possibilities for you in the future, whatever your budget is. But I'm using this number so you understand the magnitude of what's available to you, okay? Now, this is a strategy since 2011 that had a return of 8.7%, okay? This person started, I don't know if you can see it, in 12/5/20, this says 12/5/2019 is when it ended, but he started in 2011, this type of strategy, okay? So the return was 8.7%. What he did was, over time, based on his growth of his interest, just like Trevor was saying and Selena was saying, I'm going to show you guys this. I'm trying to zoom in carefully, but not too much. This individual, okay, this individual has a face amount of $600,000. Face amount means death benefit, okay? If God forbid something happens to this individual, the family will get $600,000 of tax-free income, okay? That's everything you know about insurance when you pass away. But this is the rich person's Roth IRA that you guys also have the ability to use. So this says accumulated value. So over time, this individual saved, rounding off, $100,000. This says 168,151. $100,000 that this individual, I'm zooming in case you're looking at a phone through this. I'm zooming in so you can see it. This individual has saved in here over time 168,151 in this particular strategy, okay? Now, this is pre-COVID. And the interest that this individual received in this type of policy is $22,000. Okay? From 2011 all the way to 12/8/2019. And what's key about this, he did not lose any money because this is the foundation of building everything else. When you add 168 plus 22 plus 22, that equals 190,222 for a return of about 13.12%. You get 13.12% by dividing 22,000 divided by 168 within that time frame of 2011 all the way to 2019. And as Trevor and Latonica and Selena was talking about, if there's a health concern, this money can go towards that health concern as well. And all this money is tax-free, okay? Another example to show that we don't just recommend one company, but we work with many companies. But here's another example of another company. Okay, this company I first showed you was Pacific Life in general. This company is Transamerica, not to be confused with Primerica, two different companies, okay? Now, with this particular example right here, this individual has a passing away benefit of, let's say on here, it says $1 million. $1 million will go to the family, God forbid something happens. But again, we are using this for the life side, not the death side, the life side as an individual for your family and a business owner, the life side, guys. Now, I'm going to show you here, this individual is 45 years old. This individual put in over time $195,000 because he extra funded it. He put it all in there. Imagine that Thanksgiving's coming up, guys. Imagine a turkey, right? Imagine a turkey. And you're stuffing that turkey for Thanksgiving. You have your ham, you have your macaroni and cheese, you have your cornbread. He put that in the turkey, and the turkey almost exploded, okay? This interest credit right here is the turkey exploding, okay? So you get the visual. So imagine all this food into your savings of this strategy. And then if you need it later, it's going to feed you. It's going to sustain you in case anything happens. So when you add 195 plus 29, guys, this adds up to 218,144. Now you may be saying, I may not have 100,000 laying around or two, and that's fine. I work and help people who save $200 a month, $1,000 a year, $500 a month. I let people know from your business or your salary, one should be saving, you should write this down, 10, 15, or 20% of your income. Again, 10, 15, or 20% of your income, guys. You need to save, and one of them should be in this type of strategy because you don't lose money, you have tax advantages, and you can take care of different healthcare things in the future. And then we go, and depending on your personal strategy, we go into more detail of different venues and avenues on how to do that depending on budgets. And we also utilize term, but the term that we educate about has living benefits, while some of the other ones out there do not. And that's another category. Okay. So I'm going to wrap up soon, guys. I know we don't have a lot of time. I want to wrap up around, I'm going to shoot for 10, and then leave time for questions a little bit. And then we can definitely do a part 2. I really hope you're getting a lot of information from this, guys. I want, some feet. I want you to hope this is hitting your head. But the strategy this is called, guys, is Index Universal Life. All right. Now, I'm not going to break down each word. That'll be for a private session or part 2. But it's called Index Universal Life, or from a training I was on, it's called a laser fund. A laser fund, right? Super fund, laser fund. Now, what does this mean, guys? I'm going to show you a real life example here. Now, we all know the stock market, okay? I'm going to try to keep it simple as possible. I give you guys $100 right now, okay? and your money goes up in the stock market 12%, you make 112. Your money goes down 12%, you make 98. Your money in the stock market goes up 12%, you make 110. Your money goes down 12%, you're at 97. That's the regular stock market. What the laser fund or the super fund or the IUL does with the right type of vehicle that Trevor and Selena was talking about in their comments is that, for example, guys, say for example you make 12%, okay, in this strategy, your money's at 112. Say in the next year the market drops, your money's still at 112. The next year you go up 125, your money is at 125 while the stock market went down, your money's still safe. The next year it went down again, your money's at 125. What does that mean? You did not lose anything because you have that foundation that we talked about in the beginning of that protection. So you're not losing money whatsoever. I'm going to show you guys a visual of this. Here's a visual from a book. It's very important to read books. They say they hide information in a book, right? So just like reading, we let people know, just like reading Rainbow, if you can read a book and educate, you can share this knowledge and make money. So this is the laser fund or the IUL in the dark line, guys. You see how in the market went up, this person made 100,000. When the market went down, this person was still at 100,000. The light gray here is the market going up, the stock market going up and down. It goes 100,000, 99, 198, 198. This is the regular stock market. But in the laser fund or fixed index annuity or IUL, guys, this individual never lost any money when the stock market went down. So I want you to imagine your 401k. I want you to imagine 2008, COVID. Did your 401k have this type of protection, or did your stocks and mutual fund have this type of protection when the market dropped? If the answer is no, we have to look at ways to protect your foundation. Now, I'm not saying in theory that the stocks are bad or the mutual funds are bad or 401k is bad. It's just knowing how things work and having the proper foundation first before you do all those other advanced things. That's what's key, and that's what's very, very, very important. If you don't remember anything I said today, remember to pay yourself first, okay? Pay yourself first is the key thing that you have to do, all right? I'm going to show you real quick how we get compensated to wrap it up, and we can do a part 2 next Wednesday or Wednesday after next, okay? Here's all the companies we work with. We work with Nationwide is on your side with the commercial. We're featuring Peyton Manning, who's partnered with us, a football guy. We do 401ks. We do annuities. We do estate planning and wealth management, right? Okay. We work with over 60 type companies. And we also do college planning, guys. We do college planning to help people with their students, with their daughters, with their sons, right? We also do help do wills and trusts, which is with legacy over here. And this is so important to understand. Now, the next thing I'm going to show you is how we get cut. Now, we also have Brother Yomi talked about, I'm going to wrap up around 10:05. Brother Yomi also talked about that we also have income partnerships. We are on to step back. We're in a financial campaign to educate 1 million families, 1 million families to educate. That is our goal. And the reason why we want to do that is because a lot of people don't know this information, okay? We are on a journey to have 30 million people educated by year 2030. And we literally have free financial workshops. We have free financial classes that go over in detail the concepts I'm talking about to you tonight. We have a free workshop on cash flow management, a free workshop on the different insurances I talked about, a free workshop on saving and building wealth, asset accumulation. You get a physical book that I can also send you as well. And our workshops anywhere from 500 to 1,000 people. We do them Monday through Friday, and we also do it on the weekends. And people are really coming strong. One thing that's so fascinating about us is that we talk to friends and family, adult learning centers. We have millennial nights, right? We want the students and kids to understand this. Elementary schools to speak into that I have. Homes and communities, public libraries, churches, the FBI, government agencies. We help people become debt-free. We help small business owners, large corporations, Harvard, Yale that we spoke in. One of the Harvard professors, Dr. Dahlia Mai, I'm not going to have time to show you the video tonight. She works with our company. She's a professor at Harvard in Boston. College planning, we help people get anywhere from $104,000 of scholarships. I don't know if you can see this. This is showing $2 million of scholarships we help students get that show right here. I'm just trying to go fast to wrap it up. And we also help people change careers if they want to or make an extra income. This should show an example of a nurse who's on the front lines of COVID, guys, but she made $4,000 in a day by helping people save money. So her job is not controlling her life. She has a business that's going to produce income for her, okay? And that is very, very key. I'm going to jump over here. I'm wrapping up right now. I hope you guys are taking in a lot. Again, I can go over this again if it's too much or too fast, but I'm disrespecting your time, okay? Now, you work with our company, you help people save money, you make an extra $1,000 a month, okay? You get promoted to different levels and different things like that. And in the financial industry, you get paid different percentages, all right? So there's like supervisors, there's directors, and you get what's called a royalty or override. Everybody knows the music industry, the Jay-Z, the Beyoncés, and things like that. When they make music, they keep getting a check, okay? In the financial industry that I'm in, when we help a family save money that's in the benefit of them, we make royalty income just like the music industry, all right? Now, for those out there who are really technical, there's money under management where you can help people with $1 million or $10 million, and you get paid a 1% royalty, just like the music industry, and you make an additional anywhere from $6,500 to $300,000 extra a year by helping people manage $1 million of assets, $10 million of assets, or $50 million of assets. So I want you to add up, guys, 300,000 plus 300,000 plus an extra 200,000. That's about $500,000 a year. At the same time, you are having business deductions because you're a business owner. So you're not paying taxes on a full 500,000. You're paying taxes on, say, for example, 100,000 because you have $100,000 of tax write-offs. And that's what's key as a business owner. So that's one of the ways we get also compensated. We also get compensated by building different franchises out there. I don't know if you guys know about McDonald's, Wendy's, things like that. We help people go into the franchise industry of financial education, and we promote financial literacy, and you help people save money. So for example, guys, you are what's called a senior marketing director or a supervisor within our financial campaign, and you literally help 4 people save about $2,000 a year, which is about $5 to $10 a day, guys. And you generate a revenue of about $8,000. When you do that, the company at the level will pay you a contract of about 65%. And then so you will make $5,700. Now, for example, guys, you also want to develop other financial educators to know this knowledge so they're safe for their future. And then you develop what's called marketing directors. These marketing directors know what they're doing because they're skilled, they want to learn and grow. You make revenue of $22,000 and you have a 15% spread, just like of the music industry. So you make an extra $3,300. But let's say you're training people coming in, they want to learn how to educate people, they want to make money, they want to make bread, but at the same time, they're doing it for the benefit of the other person. And you have six agency associates, they generate a revenue of $13,000. When you add all that up, guys, that's $5,000, $3,003. That's an extra $12,000 a month, plus the annual income of $155,000. Now, I want to ask you guys a question. We all know someone or somebody who could, for example, save more than $5 or $10 a day, for example. That's an extra $5,000 or $4,000 a year. When that happens, guys, this number down here will be anywhere from $200,000 to about $400,000. And we do have real life proof of that. That'll be for another workshop, workshop 2 or 3, where I show examples of that. I want to thank you guys for your time. I hope you learned a lot today. I just got there at 9 to 10. I'm in my hour, great. And then, so here is the membership benefits checklist. Here is where you could see how you want to get more information. You can definitely follow up with me. And I also want to give a shout out to Brother Yomi. I want to thank him for his spirit. I want to thank him for his mind. I want to thank him for his unity. I want to thank you guys today for listening in and learning this information and giving me the true chance to, I'm sorry. Oh, that's adorable. I heard a little one. Oh, that's so beautiful. Okay, so I want to say you guys thank you, for giving me the chance. I want to give a shout out to Blackstream with Brother Ali, one of the first the black streaming networks out there. I want to give a shout out to Brother Ali, Brother Rojo, the Powerful Pioneers team. And I also want to give a shout out to you guys for taking your time today to invest in yourself, to learn this information, to learn this knowledge. And we definitely got to do a part 2. And I definitely have to give you guys your free book for coming in today. And I'll definitely love to meet and get to know all of y'all so you can take advantage of what they're doing, so we can do it for our people, for our growth. So we're not saying, oh no anymore. We're not saying, why me? We're saying, why not me? Because now you're empowered. So I want to thank you for the people who commented in the chat, Selena, Michelle, or Michael, Michelle, hope I didn't say that wrong, Yomi, and Latonica as well. Thank you guys for your time. And I look forward to meeting with you guys on another session and helping you guys any way that I can. Thank you. All right, let me do the stop share. And how do I give it back to you, Brother Yomi? How do I do that? Anybody know how to do that?
Anyone have any questions?
Any questions? Any comments? You know.
Yeah, thank you, Brother Raymond. Thank you so much for your time, your energy, your wisdom, the knowledge you passed on to us. It was definitely a very fruitful meeting. Didn't know you were going to go into all that tonight, but definitely appreciate it. And we definitely, want to extend that invitation if you're available in the future, for a part 2 or 3 or part infinity, as you say. We just soaking up, what you're giving us. And
Definitely.
we definitely appreciate the time. And I know it's getting late, but if anybody, let's open it up now for Q&A if anybody has any questions. And we could definitely do a part 2 because I see you got a lot more information to give us.
Yeah, I had to skip over some, for the time respect. I skipped over some stuff, So
right. So it's 10:10. So maybe if anybody, maybe we could take 1 or 2 questions tonight, and we can bring you back on for a part 2, or could definitely go more in depth in the future.
All right, no problem. Any questions? No, I'll let people know no question is a dumb question. No questions are dumb questions. If you can't think of questions, definitely write them down for next time, and I'll be more than happy to also answer them as well. All righty, so if there's no questions from the chat or if you have any questions for tomorrow in the future, definitely reach out to Brother Yomi and he'll get in touch with me. If you want to look me up, my website, I'm gonna type my website in the group chat. My website is RaymondG.live, RaymondG.live, and in that website you can see more of what I do. You can look at my biography, and I work with 100 Black women. I work in the schools. You can read about that. You can see some testimonials. You can look at the video for the strategy I talked about tonight, and also on the left side on the world, you can see other articles and more of what I do. I'm also on LinkedIn under Raymond G, under Raymond G Moore. On my Instagram is Raymond WG.
Hello, I have a question.
Yes.
Yeah, are you on LinkedIn?
Yes, I'm on LinkedIn. Yes.
Can you give me your LinkedIn name so I can look you up?
Sure. Raymond, Raymond, and then space G, and then Moore, Moore.
Okay, thank you. One more question. Do you have any company that you work under, or you have your own business or something?
Sure. I'm partnered with many different companies, from Nationwide, Pacific Life. I also work with a team in a firm called World System Builders, and we're connected to many other companies out there that give us the resources to supply solutions.
Oh, okay. All right, thank you.
Okay.
You're welcome. No problem. And your name is?
One more question. By the way, are you partner with New York Life?
I partner with New York Life. Not as of yet, no. Do you know New York Life, or do you have somebody with New York Life?
I'm working with New York Life. That's what I'm asking.
Okay. Well, we can definitely review what they're sharing with you, just to make sure as a second review that they're helping you in the most optimal way possible, so you can have the tax-free income and that they're not just giving you.
No. She's a representative. She's an agent. She's an insurance agent. So.
Okay. Cool. Great. Okay.
Yeah.
Awesome.
Because you
Okay.
mentioned Nationwide, because I'm with Nationwide as well. But,
Oh, okay. Okay.
yeah.
Okay.
Yeah,
Nice, nice.
yeah,
Pleasure.
but I definitely will look you up. Definitely will do that. We can connect on LinkedIn. Why not?
Yeah, no, definitely. What is your name? So I know who be looking me up.
Okay, it's my LinkedIn name is Michelle Lange, like Michelange. Let me just put it here for you. Be much better.
Okay.
And
So I-
Michelle, you could just send it to me. I can send it to Raymond as well. So
okay, I think it's much better, right?
yeah, yeah.
I love connect to people. That's what I do. Yummy. I'm sorry.
Oh no, that's
No,
good.
no, no,
We're
no.
just
Good
trying
question.
to save time right now, and
Yeah,
I,
yeah. I just put it on my caption. It's under my full name is under my picture. If you can see it.
Okay. Okay.
Yeah,
Gotcha.
but I'll definitely check you on LinkedIn.
Okay. Gotcha. Any other questions? Any other questions that you guys have about the tax-free or anything like that? Okay. Well, if there's no questions, we can definitely set up a part two. I'll talk to you about that, Brother Yomi.
yeah.
And I see you're saving the thing. I would definitely like a like a copy.
Yeah, I'll definitely send you a recording, and for everybody in AIU, I'll post it, and I'll post all his information, Brother Raymond, and just send me that. So when I post the recording tomorrow, I'll I'm sure he'll send me his LinkedIn, Michelle, and his Instagram, like he mentioned, and everything else. So whoever wants to get in contact with him, his phone number, and it's also on his website, RaymondG.live. He can go there and get his he has his phone number up there, so you can contact him directly. So yeah, once again, I want to thank you, Brother Raymond, for giving us your time and the information, and yeah, give thanks to Brother Rojo and the Powerful Pioneers for setting this up and bringing Powerful Pioneers in here to, spread the information. And like you said, Brother Ali, and the Blackstream platform, Black-owned streaming platform, that's definitely something. I got my account, and I definitely want to, hopefully in the future, we can move to that platform, and,
Definitely.
you're all about supporting Black businesses within the AIU community. So that's definitely, we give thanks for you, shouting him out as well. Give thanks for you, of course, again, for all that information. It was very informative, and yeah, we definitely look forward to, more of these. We do these calls every Wednesday, and we definitely would love to have you coming back. And I'm glad, Michelle, you can make that connection. That's what we're about, connecting, networking with each other as well. And, we all have information to share. So, as long as we come together and build, and, each one teach one, and let's keep circulating not only the wealth, but the knowledge that's going to bring the wealth, within each other.
Exactly.
We are a community. So yes, give thanks for everybody as well tuning in today, and hopefully y'all took down some notes, because I know he was spitting out a lot of info. And like he said, he's gonna send that book, and once he sends that book, I can post that in the group for everybody as well, or email it out to everybody. And yeah,
Definitely. And again, if anybody wants to learn to become a campaigner and to get tax write-offs and also build royalty income, and we're on a strong campaign, guys. We raised close to $1 million for COVID victims. We had the CIO of Zoom come on our thing, and we had about 200,000 people for a half-a-day conference, and it was unheard of to do that. It was really a grassroots movement. We donate a lot of money to different victims of COVID. So we're truly on a financial education mission to help people out there and to make a huge difference. So thank you.
all right, thank you, brother. Thank you, everybody, for tuning in. Once again, this has been Winning Wednesdays. Every Wednesday at 9 o'clock, we're bringing you some financial information, so that we not only accumulating the wealth, but we keeping the wealth and building that wealth for the next generation. So we got to have a plan. If we fail a plan, we plan to fail. So give thanks once again, everybody, and everybody have a blessed night.
You too. God bless.
God bless.
Guys.
Peace and blessings, family.
All right, peace. God catch later.
Peace, bro.
Peace, Rasha.